Imagine making a bet that won't pay off until the year 2124. Sounds crazy, right? Well, that's exactly what Google just did. Today, we're diving into their massive 100-year gamble on the future of AI and what it might signal for all of us. So let's start with the big question. Why on earth would a tech giant like Alphabet, Google's parent company, take out a loan that they don't have to pay back for a full century? It's a fascinating question. And the answer, well, it reveals a huge shift happening in the tech world right now. Okay, so first things first, a bond for a century. To really get what Google's up to, we have to understand the weird financial tool they're using. It's called a century bond. And honestly, the simplest way to think about it is like a mortgage on a house. But instead of being for 30 years, it's for 100. So Alphabet gets this huge pile of cash today, and they promise to pay it all back, with interest, of course, way down the line in the year 2124. Now, you need to understand these things are incredibly rare, especially for corporations. Normally, you only see them from governments or these ancient, stable institutions, like universities that have been around forever, not from fast-moving, ever-changing tech companies. By issuing this bond, Alphabet has basically joined a very exclusive club. I mean, look at the other members. We're talking about the University of Oxford, entire countries like Mexico. This is just not your typical corporate finance move at all. But here's the crazy part. Even though it's so unusual, the demand was absolutely massive. For every £1 billion worth of bonds they were selling, they got nearly £10 billion in orders. So who's buying this stuff? Mostly, it's big pension funds and insurance companies, places that need to find a safe spot to park money for a really long time so it can grow and pay people out decades from now. So that brings us to Section 2, fueling the AI race. Why do they need all this cash? Well, this isn't just some interesting financial quirk. This is a war chest for a very specific fight. Yep, this money is being raised to try and dominate the global AI arms race. We're talking about funding for colossal data centers and the absolutely massive computing power that modern AI needs just to exist, let alone grow. And the scale we're talking about here is just mind-boggling. This century bond is actually just one piece of a much bigger puzzle. It's part of a $20 billion borrowing spree that Alphabet is on right now, raising cash in dollars, euros, and Swiss francs. But even that is just a fraction of what they're spending. Their capital expenditure, or CAPEX, which is the money they spend on physical stuff like buildings and servers, is projected to hit an incredible $185 billion for this year alone. And it's not just Google. If you zoom out and look at the entire tech sector, think Amazon, Microsoft, Oracle, analysts are projecting that they will take on a combined, get this, $3 trillion in new debt over the next 5 years, all of it to fuel this AI expansion. One market strategist, Bill Blaine from Windshift Capital, he just calls it an off the historical scale level of debt. I mean, that's the kind of phrase that should really make you sit up and pay attention. Something huge is happening here. Which brings us to our next section, whispers of a bubble. Because, whenever you see this much money pouring this quickly into one single sector, it raises a huge question. Is this a stroke of genius, or is it just market froth? Bill Blaine puts it pretty bluntly. He says this whole AI hyperscaler debt fest, as he calls it, reminds him of a lot of past market manias that got a little too hot and didn't end very well. So this really leaves us with two competing arguments. On one hand, you have the brilliant strategic move camp. They say Alphabet is being super smart, tapping into new investors and locking in cash for the long haul. But then you have the market froth camp, and they see a lot of warning signs. They call it late cycle exuberance, which is basically that feeling you get when a market has been climbing for a really long time and investors start getting a bit too confident, ignoring risks like, tech stocks being at all-time highs. And there's a really critical difference we have to talk about. A 100-year bond from a stable government is one thing, but from a corporation, even a giant one, that carries a completely different kind of risk. And here's why. A government can always tax its citizens, or, in theory, just print more money to pay its debts. The risk of them defaulting is incredibly low. But a corporation, it has to deal with competition, with new technologies completely disrupting its business. I mean, think about it. Can any of us really predict which tech company is still going to be on top 100 years from now? And this brings us right back to that bubble question. Bill Blaine does not mince his words here. He says if you're looking for a signal of a top, it does look a bit like a signal of a top. Absolutely. All right, finally, let's talk about the big picture here. A bet on the future. Because at the end of the day, that's exactly what this is. It's not just a financial transaction. It is a massive, audacious gamble. As another expert, Tatiana Gorel Castro, points out, anybody buying this bond is taking a huge leap of faith. You're betting that Alphabet will not only survive for the next century, but that it will keep reinventing itself and thriving in a world we can't even begin to imagine yet. But, and this is a big but, strategists are quick to warn that for a corporation, a 100-year bond is completely untested waters. It's a bold financial experiment, and nobody really knows how it's all going to play out over such a ridiculously long timeline. So, what's the bottom line? It's actually pretty simple. Alphabet is locking down a colossal war chest of long-term cash for one simple, incredibly ambitious reason: to win the generational battle for AI supremacy. Which leaves all of us with the ultimate 100-year question, doesn't it? When future generations look back at this exact moment, what are they going to see? Will they see the bold financing that fueled a century of technological genius? Or will they see the classic textbook signal that a massive bubble was just about to pop? Only time will tell.